Good morning, everyone. Greg with MasterTrader. So the markets here are continuing to do their choppy price action, and they have most of the week here. Looking at the S&P futures here, we have what was a potential launching pad right here. This consolidation at this resistance area, which is bullish. After it gapped up. A wider range bar here. Prices stayed in the upper part of the bullish wide range bar, building or creating a support area where there was no support because of the gap up. And then, the wide range bar, that creates what I call a void of support below. And the most bullish thing any market, stock, currency can do, or commodity, is go sideways after a momentum run, and even more so in the face of an area of major resistance. They did that, and let me just clean that up for a second. After they did that, this bar here was your signal bar. As it closed above its opening price and close to the high, the prices should push up, and they did. So they started their move igniting off of this launch pad, if you will, with this wide range bullish bar. And then they gapped up the next day. Well, yeah, it makes sense after a bar like this, and it got sold into, which isn't uncommon for overnight traders to sell into a gap up and then reposition. But it didn't come back. And then it began to consolidate here, and we got this green candle day before yesterday. This is the current bar right here that's 24-hour that's developing as I speak. So at that point, it was like, okay, here we go. Let's get above here. Didn't happen yesterday. Actually sold off in the morning. You can see right here, sold off. And then came right back into the end of the day, forming this bottoming tail bar into this area of resistance. Now, the most bullish thing that could have happened today would have been a gap up or pre-market being above here, and that would have suggested possibly, well, we go higher from there. Well, as you can see, that's not happening. It's actually drifting down, and there were a couple of reports out at 8:30, consumer price index and retail sales, and up until right now, which is 8:36, the market could care less. So continues to chop around with an inside day here. Now looking at the weekly chart, you see this nice move, and this is something that I discussed with students yesterday in our session reviewing the markets and different stocks and talking about trading concepts. And one of those concepts is how to read price action or slowing momentum without indicators. And you can do that. I'll just put a make-believe indicator here, what most people look at, whether it's stochastics or momentum or what RSI, whatever it might be. They're just all massaging price in different ways. So as prices go up, you look for prices to potentially get overbought. Well, those of you that see the prices don't get overbought, but prices pull back, you then start massaging the parameters or changing them, monkeying with them, if you will, to make them work with the price action. It's really an exercise in just frustration, and it's unnecessary. Just listen to what I'm explaining to you here about reading momentum. So here was a nice momentum move. It cleared the prior high nicely. So here was a consolidation. This move up creates what I call a void of support. There's no support unless it can get down here where it consolidated. Well, it didn't do that. It went sideways and created support here. Very bullish price action. And then it continued to go higher. Look at the distance now between this new move where it stalled and this move where it stalled. It's about the same. It's a nice move which clears the old high nicely. Now look at what's happening. You don't need indicators to this. You just need to know how to read price. So as price is now corrected and formed another little area of support, which you can see right here, formed this double bottom, very sloppy one I might add, we're getting a red candle this week, and it just barely takes out the high. Barely. And then forms a reversal or starts to. Now, that doesn't end the trend. To end the trend, it's got to violate major support, which I define as the low prior to the higher high. So we'll see if that happens. The trend is still up. This could go sideways next week. It could form a green candle. It could go higher. But at this point, we are just recognizing that the momentum is stalling after it just took out that high. So momentum is slowing, and we can read that without the indicators, which if you're looking at your indicators or looking at reading, or someone reporting what's happening, they'll say, oh, look at what happened here. And now we have this bearish divergence. Well, bearish divergences don't end trends, and momentum can slow down and it can speed back up again. So I would suggest learn how to read price, get rid of the indicators. Your decision-making process will be much more easier. All right, let's continue with the NASDAQ here. Here as well, nice consolidation after a powerful run, creating an area of support and a nice push higher, a stall, and now it stalls right away. Momentum is slowing down. It does not end the trend. If it can continue through here, it's very powerful. Now, will it do that today? Well, let's see what happens in the next few hours. But right now, we're getting a little narrow-bodied, narrow range bar. We call that a doji bar. So what happens at this point? Well, the assumption would be, since we've got this big move, if it trades under that low, it begins to pull back. Well, let's see if that happens next week. But we do have an area of support right here. Now, the bear side would be if it broke down below here, and then everybody, indicators, no indicators, trend lines, whatever, you say, well, it went through there, the trend is over, look for lower prices, and then we just start the process over of trend analysis of, bring up, now it's down, and how does that all play out? And we do that in multiple time frames. Now, one of the things you also take away to getting rid of the technical analysis paralysis through indicators and also trend lines and Fibonacci lines and so on and so forth is trend line breaks will happen every single time you violate major support in an uptrend and vice versa in a downtrend. So you don't need trend lines. These are not magic lines where you connect the dots and they find support. And if you're looking at that and someone providing a lesson to you for that, just look to the left. The trend line or the Fibonacci line will be in alignment with some price support area. Price is king. Right? Indicators are not. They can only move with price. And trend line users, what they do is they connect the dots, and then when that doesn't work, they connect new dots, and Elliott wavers look for new waves. So what I'm trying to tell you is keep it simple, stupid. Learn how to read price action. You don't need indicators. Just learn to follow price. All right, let's take a look at oil, which is stabilizing here. Looks like it can go higher into this resistance. Did find an area of major support down here. Bonds are perking up, and they're just popping up here. That should put some pressure on the market. Let's see if the S&Ps are starting to back off a little bit. They are not. So let's see if they just chop around here. But if bonds continue to push up, the equity markets are going to take notice of that. And I just want to take a look at financials here because they've just been messy. They came back yesterday of testing the support. I think this is one of the legs under the market. If financials begin to fall apart here, that will not be a good sign. And you can see, the pattern here that's forming, which looks like the potential of a head and shoulders top. And if it can break through that neckline there, clearly we've got a bearish pattern and confirmation of such. And the transports broke down yesterday under this little support area. Bad sign, and potentially another head and shoulders top forming. And we will see if it can break through here or whether it reverses it back up. Right, so we're constantly monitoring what's happening and updating information as it unfolds. And during a choppy market environment where things are going sideways, there's a lot of updating going on to try and figure out when a real move is going to happen one way or the other. With that being said, gotta run. Have a great trading day. Have a fantastic weekend, and we will talk to you next week.